So as you know that in section C of every economics paper, or paper is either paper 1 or paper 2, there are two questions, and in those two questions you have to choose only one question, and that question is the essay type question. So in this video we'll be doing a comparison or essay that is based on the comparison of perfect market and imperfect market in main part specifically. So that question is question 5 from 2022 November exam grade 10. Then we're gonna be answering that question, and the additional part we evaluate the minimum price impacts on the economy. But before we do that, I would like for us to quickly remind you about the structure of the essay, how the marks are allocated, and how you can get the marks, and without wasting any time. So firstly, in your essay question, you have an introduction, and introduction is only 2 marks, right? So on the introduction, you must define the concept that appear in the question, or either you define the keyword in your question, right? So let's see our question right here, which is question 5, November 2022 exam. So they said discuss, remember, introduction and the conclusion must be based on the main part. And the main part is the first bullet point, that is 26 marks in your question. So the keyword here, they say we must discuss the characteristics of the perfect market and imperfect markets in details. So here you can see that there are three things, right? First thing first, the one that include all of them, which is the markets, because there is a definition for the markets. And the second one is the perfect market and imperfect market. So in your introduction, you can either define both of the imperfect and perfect market, or you can just define what is a market, right? Because both of these are the markets at the end of the day. So in your main part, when it comes to the body, it is 26 marks. That's why now you have to come to your first bullet point and see what they asked you. So here it will depend on the question. Sometimes they will say examine, discuss or compare, evaluate, distinguish or differentiate or explain. So this one will be determined by your first bullet point of your essay question. In this case, they said we should discuss the characteristics of the perfect and imperfect markets in detail. So sometimes they will say draw a drafts. So in this case, we only discuss the characteristics. So how are we going to do it? We're gonna have a table, and in this table here on this left, we'll have the P for the perfect market and the I for the imperfect market. So we just differentiate the characteristics here of the perfect market and the characteristics here of the imperfect market, and we evaluate and see their differences, if there is anything common, right? Then after your main part, which is the main part in your body, you move forward to the additional part, that is 10 marks, and in 10 marks means you have to write 5 points or more. If you are confident, you can just write 5, but if you are not sure with 2 or more points that you wrote, you can write as many points as possible, right? So here it's like those 8 marks in your section B. That's why you will give your opinion. Sometimes they will say you draw a draft or explain. That's why you will suggest, you can provide judgment based on the question, right? So in this case, they asked us to evaluate the impact of setting the minimum price in the economy. So before you answer this question, you must know the keyword definition. So in this case, the only keyword definition you must know is the minimum price, because if you don't know what is the minimum price, you won't be able to answer this question. So it is very important to know the definition in economics, right? Because if you just know the definition, you can get this 10 marks. But if you don't know that definition, you can just get 0 in this 10 marks. Because if you don't know the definition, how are you going to know the impact, right? So after the additional part, that's why you move to the conclusion. And also the conclusion is the same as the introduction, because it's 2 marks. That's why you summarize. It should be based on the main part, right? So please, your conclusion must not be based on the additional part. It should be based on the main part. So since our main part is the markets, now perfect and imperfect, so our conclusion should be based on the perfect and imperfect markets. That's why you will summarize. You can provide judgment if you want, but without repeating something that you already said here. For example, you can't define a concept in your introduction, but that's why now you will say maybe imperfect markets should be minimized in the economy because they lead to inefficiency and this and this and this, and and they restrict, let's say, competition. That's why you see you provide judgment, you can provide your opinion as long as you wrote something without repeating the facts that are already stated, then you will get the marks, because conclusion is just your opinion, your judgment, so no one can be against it. So this is the question that we are doing, right? So let's come to our introduction, as I said before. So in our introduction, as I said, from question 5 of this question paper, we're gonna explain, as I said, you can either define markets, you can either define perfect or imperfect markets. So for the sake of this video, because it includes both of them, so it is very important to define the term market, right? And this term is easy to understand because it just defines what you always do in a daily basis. So a market, it is a place, or it exists, whereby buyers and sellers, they meet together to exchange the goods and services at a prevailing or a charged price, right? So a market, it is the place where there are buyers and sellers that meet together to exchange the goods and services at the prevailing price, or there must be a price involved. There must not be a free exchange of goods and services, right? So that is just a definition of the market, and you will get your 2 marks for that. This is your introduction. You got your 2 marks, right? Why are we defining market? It is because the question is based on the markets. Remember, guys, markets, we have perfect markets and imperfect markets. So if you just define the market, that means you are just defining the title of the markets and imperfect market, because they are just the subtitle of the title, which is the market, right? So coming to our first bullet point, because it's our main part when it comes to the body. They say we must discuss here. They say we must discuss characteristics of the perfect and imperfect markets in details, and that is 26 marks, right? So what is very important here, it is very important, as I said before, to just tabulate it, as if they say it's a question like differentiate, because you will see here, you will write the characteristics of the perfect market, and on this side the characteristics of the imperfect markets. So by doing that, you are just differentiating them, you are showing how they differ, because I don't think there's something common in most of the perfect and the imperfect markets, right? So let's just get to our main part. So first thing first, we need to define perfect and imperfect markets, right? So this is just the table that I created, as you can see here. It's this T. Then on this side we've got perfect markets, on this side imperfect markets. So our definition of the perfect market, this is just a definition, and it is very important to write it, because it also shows how they are different. Because guys, a characteristic is what makes you different from other things, right? So even if you define it, you're still going to get marks, although the question said the characteristics of the perfect and imperfect. You don't have to only show the nature, the number of buyers, and the availability of information and all that. You can also define the perfect and imperfect markets, right? So that you can get a lot of marks. So here, a perfect market, let's start with the market. This is the market structure, right? Where there are many, I forgot, market structure, guys, is also sometimes they will ask you to define a market structure. So a definition of the market structure is this one: it is a place whereby buyers and sellers meet to exchange goods and services at a prevailing or a charged price, right? So if they ask you to define a market structure, don't be confused, it's the same as the definition of the market. So when it comes to the perfect market, it is a market structure. All of them are the market structures: monopolies, oligopolies, monopolistic competition. All of them are the market structures, where there are many buyers and sellers selling identical products, homogeneous or the same, and they take price from the industry. So these are the example of businesses in the perfect market. The reason why I said it's easy to understand this definition, because you just define them with their characteristics that we are going to discuss in this video, right? because we already know, or if you don't know, you will know there are many buyers and sellers, and those buyers and sellers, they are selling homogeneous or identical or same products, and they take the price from the industry. That means they don't influence the market price. So when it comes to the definition of the perfect market, it's just, you just define it by its characteristics. So you don't even have to try and memorize it. If you know its characteristics, you can use it as their definition. So these are the examples of businesses in the perfect market, right? These trade vendors, those people that are selling, let's say for example, close to the taxi rank, that are selling the fruits there, bananas, cigarettes, sweets and everything, ball pens, and the agricultural markets, vegetables and all that. So coming to the imperfect markets, these are the market structures also, in which suppliers are able now to influence the market price, right? And these are the three types of imperfect markets. The first one is the monopolies or the monopoly, oligopolies, and the last one is the monopolistic competition, right? So all of these three are there. They are the imperfect markets. There are four market structures, which is perfect market, oligopoly, monopoly, monopolistic. But there is only two, which is the perfect market and the imperfect markets. But when it comes to the imperfect markets, we have three imperfect markets, which is the monopolies, oligopolies, and monopolistic competition. So without wasting any time, let's discuss these characteristics and see the actual difference between the perfect and the imperfect market, right? So the first characteristics we're going to discuss is the nature of buyers and sellers. Remember, guys, will also get the mark for just writing the nature of buyers and sellers, but not in both of them. So if you got it, you won't got it on this side, because we'll just write the nature of buyers and sellers, and you discuss the characteristic, right? So 1 mark for just saying the nature of buyers and sellers, and you will get 2 marks for defining both of them, right? As you can see. So when it comes to the buyers and sellers, let's start with the perfect market. So there are many buyers and sellers in the market, right? That is 2 marks. And this one is very simple, because you can imagine those people close to the tax rank. There are many buyers, there are many, no, there are many sellers there. There are a lot of people that have those stands there, have their tables, they are selling the goods and services, and there are a lot of buyers, because customers are going to the taxis and they can just grab banana and go to the taxi, right? So you see, there's a lot of buyers and sellers, right, in that market. So when it comes to the nature of buyers and sellers in the imperfect market, there are few sellers, but they may be a large number of buyers, right? But there are few sellers. I will make an example of the monopoly, whereby I will use electricity, which is the big company in South Africa, Eskom. So if I will ask anyone, even a child, the electricity company, or the electricity that they use, the type of electricity they use at home, everyone will say Escom, most of the people, right? So monopolies, that is why there is only one seller of a product. There is only one seller of a product, right? Because there are few sellers. It is limited based on their barriers, and we're gonna discuss that as we continue with the video, right? So just know that in perfect markets there are few sellers. Why? Because sometimes it is limited because of there are barriers to entry, government restrictions, and the patents and the copyrights. So it is not easy to access, or the market is not totally accessible or available. So now let's move. But before we move, I want to remind you, or make it, just want you to, so there's something that is very important here, because when it comes to the imperfects, they are just the opposite of the perfect markets. If there are many buyers here, there are few buyers here. If there is free entry and exit here, there are barriers to entry here. So just know that imperfects are the opposite of the perfect markets. So, by meaning of many buyers and sellers in the perfect market, that means no one has influence on the market price, right? That will definitely lead to the competition, even though everyone has the right to change the price. But now it makes you not to have the influence, because you already know if you change the market price, in the perfect market, customers or buyers won't come and buy your goods because the market has competition. Everyone is charging the same price. So now, if you can increase the price that is set by the industry above the market price, then that means that no one is going to buy your goods. By the way, in industry, that is where the price of goods and services of the perfect market is discussed and concluded. So if you can, it is the price of, let's say, for example, or set by the industry for bananas, a bunch of bananas is 20 rand. Then you change the price to 30 rand. Definitely, no consumer is going to buy your goods and services because there is a lot of sellers, and if you can notice, those people are just close to them, close to each other. So it's easy for a consumer to make choices that, okay, I don't want to buy here because the prices are high. I know already know here that the bunch of banana is 20 rand, but now this person increased it to 30 rand. So that is why it has no influence on the market price when it comes to the perfect markets. Why? It Because everyone is charging the same price. So if you increase or decrease the price, that will negatively affect you, because even if you decreased it, you will have a lot of buyers, but at the end of the day, that won't benefit you because you will make loss, because there is high cost of production but you sell it with low price, so you are not earning, you are just increasing your costs. But now when it comes to imperfect market, sellers, they have an influence on the market price of a product. So if they have an influence, that means that reduces the competition, right? So by meaning that on the perfect market, they has no influence, that means they are the price takers, right? They take the prevailing market price from the industry. But now when it comes to the imperfect market, these are the price makers, as I said, as they have the influence. So that means they are price makers, they make price for themselves. I want to make an example here of Escom again, right? So when it comes to Escom, they can increase the price, although the government will intervene to not to so to regulate them not to exploit the customers or consumers, but they can sometimes increase the price because they have influence on the market price. And even if it increased, the consumers, the market doesn't have the competition when it comes to, let's say, monopoly. It doesn't have the competition, so it makes it difficult for consumers not to buy the product, even though it's expensive, because there is no close substitute. Although there may be small businesses that are trying to enter the market of selling electricity, but they don't have information, as there is no perfect there is imperfect information in the imperfect markets, right? So that is why they are price makers and they can influence the price, and that will definitely reduce the competition. So let's move to the third characteristics, which is the nature of products, and we'll get a mark for just naming it. So when it comes to the perfect market, let's start with the perfect. The products are homogeneous. You'll get 2 marks for saying that. What do you mean when you say products are homogeneous? Because in section B, if this is not asked as an essay, they will ask you, can you define the what's this? The term homogeneous. Then when I'm saying that all products are homogeneous in the perfect market, I mean they are the same regarding the quality, they are the same regarding appearance, and they are the same regarding the size. So that is why they are homogeneous or identical or same. So now when it comes to the nature of products in the imperfect markets, the products are heterogeneous. So now if you have to define that concept, that means they are quite different from each other. They can use, if I have to make an example based on the monopolistic competition, they can use logos, since products are differentiable, logos, branding, all those market advertising to just to change or make their products different from each other. I will make an example of a car in the monopolistic competition market. Let's say, for example, Mercedes. Mercedes, although the car is similar, but they will try to make it different from its competitors like Volkswagen. So they can try to design new cars by using their logos, branding, uh, have more designs just to change and make it different from its competitors, right? So that means that consumers have option in the imperfect markets. The consumers have options to look for specific qualities of each product. But now when it comes to the perfect market, since now the products are the same regarding the quality, appearance and the size, that means it makes no difference to the buyer for where and from whom to buy the product, because you can just go to anyone because the product is the same. Even if I can come here, go to the agricultural business and buy bananas and went straight to the street vendors around taxi rank and just say it and just sell it there, I will get people to come and buy from me. Although I'm new in the market, there is no need for them to have the let's say for example to know or look for specific people to buy because the products are the same. So that is why it makes no difference for them. But now when it comes to the imperfect markets, as I made an example of the monopolistic competition, you can look for the car that you want by looking at the branding, by looking things like design, by looking things like size, by looking things like logos. You can check Toyota, you can check Volkswagen, Mercedes. So you have options. That is why consumers can look for specific qualities. Qualities, that means the strong qualities of each product. Now you can't even look at the quality of a product in the perfect market because products are the same regarding quality, qualities, appearance and the size, right? So let's move to another uh, characteristic. So free entry and exit, there's a mark for that. No, not free entry but entry and exit. So let's start with the what's this, perfect market. Remember guys, on our left side we have perfect market and this side is imperfect market, right? So free entry and exit on the perfect market, there are no barriers or limitations to enter the market, right? So that means there is complete freedom of entry and exit. But now when it comes to the imperfect markets, there are barriers to entry. There are barriers to enter the market. So what does that mean? If there are barriers to enter, that means other sellers are prevented from entering the market. So what are the types of those barriers, or what are those barriers that are or restrictions? If you don't want to say barriers, you can say restrictions. So if a question asks you what are those barriers that restrict other sellers from entering the market, these are the barriers like sellers are protected from competition through the patents and the government restrictions. So the government also restrict entry to the imperfect markets through also these patents and government restrictions. But now when it comes to the perfect market, since now there's complete freedom of entry and there are no limitations or barriers in the market, that means that enterprises are free to enter the market where there are opportunities of making profits, and they're free to live where their losses is occurring. So I will make an example here. As we're approaching the summer, you can start the businesses of selling ice cream, right? Because we're approaching the summer, and when the winter comes you can left the market because you will make loss. No one is going to buy ice cream when it's on the winter, right? But now, because why you can left and enter when you want, because the market is free. The market is totally accessible. There is freedom of entry and exit. But now when it comes to the imperfect markets, that thing is restricted. Only only the sellers that are in the market can function in the market, right? Other sellers are prevented through patents and government restrictions. So copyrights and all that. So that is, as I said guys before, imperfect markets are just the opposite of the perfect markets. So I think you know now the most important thing to know here, there are no barriers to entry, perfect market, so there's total freedom of entry and exit. But now when it comes to imperfect, there are barriers to entry like government restrictions and patents. So other people or sellers that want to join the market are prevented to enter the market. As you can see on the monopoly, that there is only one seller of a product that dominant. There's only one seller that dominant or that is big in the market. But now we come to the availability of information. Is the information perfectly available, or is the information not available or not or imperfect? Perfect information, guys, remember, once a thing is perfect, that means you get every information that you want about the market. But now let's come to the perfect market and see what they say about the information. So on the perfect market, there is perfect information in the market. What does that mean? The buyers have complete knowledge about the prices, quality, availability of goods, and where to find them. As I said, guys, even me right now, I'm sitting here in this text. I already know if I want to buy the bunch of bananas, I can go straight to where they sold them and buy it. And I already know the price right now of a bunch of bananas. I already know the qualities and the quantities inside each bunch of bananas. So buyers have complete knowledge about the prices, quality, and availability of goods and services. But now, when it comes to the imperfect market, there is imperfect information. I can ask you about the price of a car, you won't respond. But if I can ask you about the price of a sweet or pin pop, you can know the answer, right? Because when it comes to the perfect market, there is complete information. The buyers have complete information about the prices and qualities, right? But then, since now there is imperfect information on the imperfect market, it is not easy and sometimes impossible for the buyers to know what all the prices or what are the prices of a product are within the market. So buyers don't know the prices of the product. As I said, guys, even if you can ask me the price of a car, I won't respond. And since now they have influence on the market price, so it is not easy, not possible to now determine the price, because they can fluctuate. They can influence the price anytime they want because they have a right, or they can sometimes do that as there are few sellers. There is no competition in most of the imperfect markets besides monopolistic competition. Right, so we move to another characteristic, which is the government intervention. This one is the characteristic that I never forgot to write in economics because it is very simple. In perfect market, government doesn't intervene. Buyers and sellers are not influenced by the government intervention. But when it comes to the perfect market, government intervene to regulate the behavior of the imperfect markets. But guys, I think everyone should understand this. It is possible for the imperfect markets to have the regulation from the government, because now if they can do all of these things, influence the prices, and now the entry is restricted by the government, so that means there is government intervention there. Government intervene to restrict their entry in the market and make sure that the behavior is regulated so that they don't increase sometimes the price uh, a lot. Let's say, for example, from 200 to 1000. So government intervene to check those things, and also that is why there is also this thing of setting the minimum and the maximum prices and all that. Government intervene in the imperfect markets to do all of those things. But now there are no barriers to entry in the perfect market. Government doesn't influence, or the perfect market is not influenced by the government intervention. There is no regulation from the government. Everything is free and accessible, right? So let's move forward to our additional part, because that was the main part. So guys, please, to those that are new, please don't forget to like and subscribe, right, so that you help the channel to grow and this video to reach every student so that they can understand this essay, right? So we move forward to the additional part. So here they are saying that we must evaluate the impact of setting the minimum price in the economy, and it is 10 marks, guys. So when there is 10 marks, you know that you have to write 5 or more points, right? Please don't make a mistake of writing maybe 2 points. No, write 5 or more points. Each sentence has 2 marks, but if you are not confident about your sentence that you wrote, you can write as much points as possible. So before we go to this additional part, guys, this is not asked, but I want to show you graphically before we go to the impacts theoretically. So I will draw the graph of minimum price, then in that graph, I want to show you that in economics, a graph can answer everything. So let's draw the graph of minimum price. It was not asked, guys. If this question is asked in your essay, please don't draw this graph. But this graph, maybe sometimes they can ask it on section B. So that is why I'm drawing it, so that you understand exactly what is the minimum price. Right, so firstly I want to define it to you. So in your additional price, additional part, we'll just write the heading here: impacts of setting minimum price in the economy. But now it is very important to define the concept that we'll be talking about. So in this additional part, we'll just say minimum price is also called sometimes the price floor. So in section B, sometimes they will ask you to define price flow. So if you don't know that, you won't know if. But if you didn't know, now you know that that is the minimum price. So it is the price set by the government above the equilibrium market price. So it's just the opposite of the name, because the minimum, but now government don't set it below because it's minimum. Government will set it above. If why, I don't know why they call it minimum, because it was supposed to be maximum, right? But just now minimum is the opposite of the name. The government will set the price above the market, the equilibrium market price, right? So let's draw this graph. So and we see, let's see how we can answer that question by using our graph, right? So in our graph we'll have the equilibrium price, and will forgive me about so let's call it Q, and this one is P. Then from the left, top left to bottom right, we have our demand, and we have our demand. This is just the ordinary or the original graph, right, for the equilibrium quantity. Then from the bottom left to top right, we have our supply, right, this S right here, and this one is the equilibrium quantity, this one, and this one is the equilibrium price, and this one is the equilibrium where demand meets or is equal to the supply, right? Then now things happened in the economy and things changed. The government will intervene and set the market price. Then now, what is the market price? The market price is a price set by the government above the equilibrium price, and this is the equilibrium price if you don't know. So government will increase it from P to, let's say for example, this is P0, and will increase it to P1, which is price 1. So let's say if here it was 5 rand, the government will increase it to, let's say, to 10 rand, for example, right? So now the price increased, so just draw the graph to show the minimum price, right? Just call it min. So this is the minimum price. The government increased it, but now in the minimum price we don't show the shift of the curves. Don't show the shift of the demand curve and the shift of the supply curve. We just show the change of the demand, quantity demanded, and the quantity supplied, and the price. So now you see the quantity demanded here. Let's say here these quantities were 10 quantity demanded, and there were 10 quantity supplied. But now you can see that the quantity demanded moved on this side. Let's call it Q1, and let's say the quantities maybe are 5 here, from 10 to 5. So the quantity demanded decreased from 10 to 5. And when it comes to the quantity demand supplied, as you can see, they increased from 10. We can call this one Q2, or you can use the numbers and say it's 20. It's 20, right? If you don't want to use these two things and don't know. So you can call this one A, point A, and point B. That's for your explanation to be valid if you were asked this question. So analysis of this graph. So this was the equilibrium price, but now the government set the minimum price and price increase from P0 to P1. But now, because of that price is increased, no one is going to buy the goods and services, right? So the demand will decrease from 10 quantity demanded 10 or Q to Q1 or 5, right? But now, because when it comes to the suppliers or businesses, when the price increased, they look at it on a profitable way, and now the quantity supplied will increase because the price is increasing. So they are looking for it in a profitable way, because they know if the prices are increasing, that means they will get more profit, right? So that is why the quantity supplied will increase from 10 to 20 or to 2, right? So the quantity supplied in this case are more than the quantity demanded, and that is why it will trade something called surplus here. So if you don't know what a surplus is traded when the demand is supply is more than the demand, right? It is just a difference of 20 minus 5, which is the 15, because it's traded when the supply is more than the demand. So know that minimum price will lead to the surplus, right? What else I didn't explain? You see, when the minimum price is set, there's an increase in the quantity supplied, but there's a decrease in the quantity demanded. There's an increase in price, and that trades a surplus. So, to answer that question that asked us on the additional part, the impact of the minimum price, we already see it in the graph, but now we just need to put it in words. So let's go and write it in in our additional part, right? You see how it is very important to know the drafts in economics so that you can answer any question. So coming to the second sentence, suppliers will supply more. There is a mark for that, and consumers will demand less due to the higher prices. You will get 2 marks for saying this, and this is not something that you just trimmed. You saw it by the draft. Suppliers will supply more goods and services, as you can see from point B to this 20, which is Q2, and the demand will decrease. Why demand decrease? Because of higher prices, because prices increased from 5 to 10 rand. So there's an increase in the price that lead to a decrease in demand. So let's say another thing that is on the draft again. So this means that there will be a surplus. Why? Because the supply is more than the demand. And what a surplus will influence? A surplus will have a negative influence on the demand. Yes, when they, because according to the law of supply, guys, when the price of a product increases, the supply of a product also increases. Because if you can be a business, or you can have your own business, and you see that, okay, the prices of, let's say, mobicel are increasing, you can increase the quantities, you can supply more mobicels, because you know people will have to pay higher prices to buy this product. That is why the suppliers supply more goods when the prices are high, right? So moving to another thing, prices will be high. Yes, as we already saw it in our draft, the prices will move from P1, no, from P0, increase it to P1 or 10, right? Then the last one, you can say, since now you already stated a lot of things that happened in the draft, you can just summarize that minimum prices limit competition and thus exploit the consumers, and you'll get 2 marks for saying that. Why it limits competition? Because now the prices will be determined by the government, right? So that means the what's this? The buyers, no, the businesses has no influence on the price, right? And also the reason why it will exploit the consumers, it is because of things like sometimes the government can charge the price high because the government want to generate revenue from the tax that is paid by the businesses. So that is why it sometimes exploit or have a negative impact on the consumers. But now the reason why it limit competition, I don't want to explain it in that way of a price control being set by the government and everything. The reason why it can end up limiting the supply, and no, not the supply, but the competition. I think it is because now businesses, a lot of businesses will supply more goods and services, but a lot of them will leave the market. Why? The demand is low. So that means when the demand is low, also the profit is low. So they can end up making losses. No one is buying the products because prices are high. So that's also why the competition can be limited, right? So you see, guys, everything we answered here in this additional part is from this draft, which is the minimum price draft. So it is very important to know this draft, guys. maximum price, know all of these graphs so that you can be sure. Even when it comes to section B, if this question is not asked as an essay, you will have to discuss it in section B. So let's move, because in our structure of the essay, we have the last one component of our essay, which is the conclusion, whereby we conclude, make judgment, opinion based on what we're talking about in the main part, not the additional part. So this is my conclusion. You can have your own conclusion, which is your opinion, your judgment. But let me just show you how I interpreted mine. Your conclusion is just a framework, guys. Don't define anything. Don't repeat anything you already said, but just summarize. So my conclusion says the market structure operates under different market structures operate under different conditions. Yes, guys, we saw that because in perfect markets there is free entry and exit, but now when it comes to the imperfect markets, there are different conditions there. There is no entry and exit. There is a restriction by the government. So you can see that there is a control that is being implemented. So understanding these market structures will help us see how businesses behave, yes, how prices are determined, and how consumers are affected. Yes, we can see now the prices are determined by the industry in the perfect market, and we can see on the imperfect markets that the prices are determined by the businesses. And we can see how that affect consumers. Consumers can be exploited in imperfect markets, especially in monopolies, and consumers can be affected positively in perfect markets because there is a competition. You can see, okay, this person increased the price, let me not buy to this person, right? So you can see the summary that I made in this conclusion, and we'll get 2 marks for saying that. And I think in conclusion everyone should get these marks because that's just your opinion. It doesn't have to be the same to everyone or a learner of economics, right? So for section B, there's a draft video here. I will link it here for the Labor Force and the Labor Relations Act, which is section B, that will be asked in your paper too, right? So please click here. And don't forget to like and subscribe, guys, and comment with the date that you are writing economics paper too.